Some of that selling has come from FTX. Some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that. And then I think we end the year above 200K.
Hugan begins by highlighting the importance of the broader macroeconomic environment as essential context for understanding current market conditions. He points to recent instability in interest rates, rising tariffs, and ongoing geopolitical tensions as factors that triggered a temporary V-shaped shock across financial markets. According to Hugan, this short-term volatility has diverted investor attention away from a more important development, the underlying strength of the crypto sector. He argues that, absent these macro disruptions, cryptocurrencies, especially Bitcoin, would likely be trading at much higher levels today. Instead of focusing on short-term noise, Hugan suggests that investors should recognize the resilience and long-term growth potential of digital assets, which remain fundamentally strong despite temporary external pressures. Hit like and subscribe faster than the Fed hikes rates.
The crypto-specific drivers are so positive right now. I think we would be much higher today if we hadn't gone through this crazy V-shaped macro thing. It distracted all of us from the fundamentals being so strong in crypto. So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen. And if that's true, it's going to be a great rest of the year. I do think we learned something from the April sort of tariff tantrum.
Yeah.
This was the first macro shock where traditional investors could access Bitcoin. If you go back to previous macro shocks like the taper tantrum or the last China trade war in 2018, traditional shops couldn't use Bitcoin as a tool. There weren't ETFs. There weren't regulated futures. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden, traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, you know, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset, and macro is sort of on the sideline. Demand and supply. The thing about Bitcoin right now, the reason this is the best moment in history to buy Bitcoin on a risk-adjusted basis is there's just too much structural demand for the amount of supply in the network. Bitcoin only produces 165,000 Bitcoin per year. Last year, ETFs bought 500,000 Bitcoin. I think they may buy more than that this year. Add on corporate buying and government buying. There is just too much demand. I don't think anything stops the train. We feel more confident about that $200,000 prediction today than we made it in December of 2024. So there are select number of sellers who have been willing to sell around the $100,000 point. Why? Because people are human. Some of that selling has come from FTX. Some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that. And then I think we end the year above 200K. People are wondering, how do I invest in stablecoins? How do I invest in tokenization? I think as they start to knit that together with what that means from looking down chain beyond Bitcoin, we're going to see some diversification beyond Bitcoin. Bitcoin is still king of the hill. It's still going to attract the most flows, but I think people are probably too skeptical on ETH and Solana flows into traditional financial products. I think it's going to hit up, sort of tick up at the end of the year. Real story is ETH properly, right? ETH went down, 60% from its all-time highs. If you staked and earned a few percent, you were still sad. So I think most people are betting first and foremost on ETH. The staking will be nice. It will be a reason to buy the ETF and not do it directly, but it's not a game changer. The game changer for ETH is the change in the Ethereum foundation. The game changer is the success of the Petra upgrade. The game changer is maybe stablecoin and market structure regulation. I would look to those things more than I would the addition of staking if you want to see ETH ETFs go to tens of billions of dollars. I think they're starting to, but I don't think we're there yet, right? I think that you need to knit together a few positive stories, and you really need to see the inflection. I think if we get stablecoin legislation passed, that'll be the next sort of leg in the stool, I think it'll be helpful. Look, I'm very optimistic for ETH long term. I'm less certain in the intermediate term. I think in the intermediate and short term, the story for Bitcoin is very clear, that demand supply mismatch. I think ETH has more work to do, but I do think investors are looking at it as maybe almost a value play in crypto. Those aren't words that we use very often. Often the hype exceeds the fundamentals. It may be the case that the fundamentals are exceeding the hype on ETH. That can be interesting for people with, let's say, a 2-year time frame.
Touching on geopolitics, Hugan offers a brief but pointed observation about China's shifting approach to crypto. He notes that the country stands at a crossroads. It can either isolate itself from the wave of decentralized financial innovation or engage more actively and become a key player. As it stands, Hugan believes China is unlikely to play a significant role in crypto's near-term future. However, he emphasizes that in global finance, no door is ever permanently shut. China could still pivot and re-enter the space when strategic interests align. Now let's go back to the interview.
U.S. Treasury, which is not known for outlandish predictions, thinks stablecoin AUM will go from $250 billion today to $2+ trillion within the next few years. I think they may be understated, but they're predicting a 10x. And that means critically that people are going to be using crypto in their day-to-day lives in the next couple of years. There's always been this criticism of crypto. When are we going to see the real-world impact? The answer to that is in the next few months. We're going to start seeing stablecoins penetrate regular daily use. You're going to start feeling it in the next couple of months. I heard Vlad Tenev, CEO of Robinhood, the other day. He's using stablecoins to do collateral settlement on the weekends, right? I actually think there's going to be a big B2B move and a big international move. Look, I think it's going to get to the consumer. I think in a few years, we may be buying goods on Amazon with stablecoins and getting a 1 or 2% discount. But I actually think businesses are going to be the first ones to pick them up. If we're talking about paying an extra 2% when we go to buy a coffee, that's like, what is it, 20, 30 cents, sort of whatever. If you're moving trillions of dollars, you better believe that 2% matters. So I think it's going to be B2B first, B2C sooner than you think. But B2C will still be, a year or two away in the US. But you're going to see the B2B impacts, I think, pretty immediately. I think two things are happening. One, I think it's desensitized away from tariffs. We realize the world's not going to end. There will be tariffs. They'll be varying in size, and we'll continue to live our day-to-day lives, right? I also think, to an extent, people are looking at crypto actually as this source of stability.
Kind of a hedge.
If you think of, do you want to loan government money for the next 30 years, right? That seems a little crazy. We see these deficits spiraling to infinity. Crypto is just doing its thing. So I think it is decoupling a little bit. And I think people are calming down that, yes, the world is changing, but it's not, it's not completely changed. So the market is unlocking in two major ways for Bitwise. Remember, Bitwise serves a lot of institutional and professional investors. So the dual unlocks are those platforms are getting more interested and more open in letting their wealth advisors and wealthy investors access crypto at the same time that the SEC is broadening the window of what it will allow in ETFs. So it's a very exciting time for Bitwise because that means we can build the products that people want and help them access it. So we do these surveys of institutions every year and we ask, what's preventing you from allocating to crypto? It's not the volatility, it's not environmental concerns, it's not any of the FUD questions. It's always been regulatory uncertainty because the last thing these people want is a regulator knocking on their door and asking them questions about why you did this or why you did that. They need the regulatory green light. So the approval of ETFs specifically provided a lot of that regulatory clarity. And now that the SEC is hopefully allowing more and more ETFs, it's just opening it up significantly every day. I can't speak on any specific filing because, of course, we have filings live at the SEC, but I think we're making progress. You have all the indications that we're on track. What do I mean by that? We're starting to see regulated futures trade. We're starting to see the SEC consider more innovative things. We're getting to the point in the timeline where the SEC has to say yes or no. So I'm hopeful we'll see major unlocks. And I will say this, when I talk to institutional investors, they're excited to look beyond Bitcoin. Many of them have exposure to Bitcoin and they're happy about that. It's a great hedge against fiat debasement. It's a great hedge against debt and deficits. But what else can blockchains do? They can do amazing things on stablecoins, tokenization, etc. And that means broadening your exposure. So I'm hopeful we'll get there this year from the SEC's perspective. And I think the institutional demand will be there for these other non-Bitcoin exposures, because these are markets that people are very excited about. Washington can always fumble it at the 1 yard line. I mean, how many times have we seen that? So I'm very optimistic about the stablecoin bill, but it's not signed into law yet. That would be a significant setback. You could see the SEC be more conservative. Again, I'm very optimistic. I think the data is there. I think the rationale is there. But I've definitely learned over the years, Paul, you can't trust Washington until it's done. So I'm keeping a hawk eye on Washington to make sure they stay on the path of doing the right thing for investors and the right thing for America. I think they will, but let's prove it before we celebrate. I think it's sort of up to them. If they want to be a closed ecosystem that's oppressive to their people and insists on surveillance and doesn't embrace these decentralized freedom-driving assets that crypto are, then they're not going to play a role at all. They could wall themselves off. If they open up, which they have in the past, they've been on again, off again, then they could play a major role. I think it's really up to them. I don't know, which side of the spectrum they'll fall on. I'm not a China expert, but it's up to them. Right now, it looks like not that big a role.
Hugan observes that institutional interest in crypto is expanding well beyond just Bitcoin. With many investors already having allocated to Bitcoin, the conversation is shifting to a deeper question. What else can blockchains do? Institutions are increasingly intrigued by Ethereum, the potential of tokenization, decentralized infrastructure, and particularly the real-world utility of stablecoins. In response to this evolving demand, Bitwise is positioning itself to serve the next wave of adoption, offering regulated investment products that provide diversified exposure across the entire crypto value chain. Want more alpha? Click on this video next.